So we've got two green candles on the weekly Bitcoin chart. Now everybody's a bull. Hello and welcome back to the weekly crypto review. It's amazing. The investors, traders, people who would they have the memory of a goldfish. It's amazing. The market suddenly turns downward for a week or two, and everybody's is a bear. Oh my God, the market's crashing. It reverses and goes back up for a week or two, and hey, we're back in a bull market. No, that's not how that works. That's not how any of that works. So let's take a look at this. First off, as always, if you feel the information I'm giving you is valuable, like, subscribe, share the video. If you really feel bound to, I would not mind if you went to cryptocurious.tv/support and sent a little crypto to any of these addresses. That helps support this YouTube channel so that I can continue. Also, and you'll find it in the description below, I'm not just on YouTube, I'm also on Library. After the YouTube scare at the beginning at Christmas, pretty much everybody is decentralizing their videos so that no matter what happens, you, the viewer, will have the ability to see what's going on. So let's take a look at what we've got. So, and I'm looking at this the wrong time. There we go. So we look at the chart, the different coins for the last week or so, and everything's in the green. Whether it's in a 1 day, a 1 hour, 24 hour, or 7 day, most everybody's in the green. And that's great. That's fantastic. But I mean, that's what you would expect to see with a couple of green candles in the markets. Let's take a look and see who our big winners are. So Dash at 114%, 114.5% is the big winner. Bitcoin SV, which was the big winner last week, has dropped down, which it doesn't surprise me at all. Bitcoin Gold, number 2, 108%. I don't know, both of these are being traded on exchanges that have no volume, they have no customers. It's like 2 or 3 people, if that many, probably trading between the two. Buy Bitcoin Gold, exchange it in Bitcoin SV, exchange it back. And they're wash trading is what they're doing. That's extremely illegal in this country, in the US, but they're not located in this country, so they can do it. They can create as much fake volume as they want and manipulate the price as best they can to try and coax people into buying something that is rapidly going up in price. That's not the way we operate, at least not if we know what we're doing. I am really happy to see EOS going up by, it looks like 33, almost 34%, 33.75% in the last 7 days. I haven't had a whole lot of good news over EOS. I own EOS and have held it for over a year. It's nice to see the price going back up. We'll see where it ends, where things end up. I currently have all of my EOS staked, so I can't sell out. It'll take me 3 days to unstake it if I want to sell, and that's fine. I'm not worried about it. But when we start looking at the bubble, when we start seeing the bubble, that's when I'm going to start looking at unstaking it so that I can move it quickly, so I can exchange it quickly. Let's see what else we got down here. I do see, here we go, Chainlink is down here. Chainlink and Litecoin both up by about 22.5%. Good to see. I'm glad to see that they are going up. Chainlink, I own both. Chainlink is one of those that I absolutely think is going to do very well in the next year or so. Again, none of this ever is investment advice of any kind. I'm simply pointing out, here's what I see and what I like and why. It's for educational purposes, it's another input for you to come to your own decisions. But Chainlink is one of those coins that I really like. I like what they're trying to do by bringing off-chain assets on to the blockchain, giving it it's basically a gateway to allow anything to be tokenized. That's something that I think has got a lot of potential in the next 10, 15, 20 years. And so in this next cycle, I'm really excited to see where Chainlink goes. Litecoin, it's the crypto silver to Bitcoin's gold. It doesn't really offer a whole lot that Bitcoin doesn't also offer. It does, I believe, at this point offer Lightning Network, but that's about the only thing that it offers that Bitcoin doesn't. But again, it's a if you're going to compare this to stocks, Litecoin and Bitcoin would kind of be your blue chip stocks. So they're the things, the relatively safe. Nothing safe, but the relatively safe assets that that grandma buys because they've been around forever and everybody knows them. We'll see where they go. Litecoin, like I said, at some point by the end of this bull market, I won't be surprised if Litecoin is worth around $1,000 a coin. I just won't. All right, so let's take a look at the actual charts. We're looking at Bitcoin at this point, and we're looking at the weekly chart, which is where I usually start. Let's pull this. I don't need all of that. Okay, so this is the high. This is the curve. This is the high that we had back in December of 2017, so 20,000 or thereabouts. And this is where we are currently at 88.85. And we've got these two wonderful green candles. They look fantastic. It's not enough to get excited over. Not at this point. I mean, I'm glad to see it. Don't get me wrong. I'm really glad to see it. But it's not... It's nothing to write home about. Let's get some more. Let's go up smoothly, slowly, but smoothly. Let's take the escalator. We don't want an express elevator. We want an escalator. We want to go up smoothly, relatively slowly, and because like I said, I think it was last week. If we had gone on a nice shallow curve up to where we are now, everybody would be happy. We'd be making money, but we jumped up here, and as you can see by my bubble pop indicator, right here, back in August thereabouts, we were getting close to a bubble. We were entering bubble territory, and that's not good. We don't want that, not yet. We want that at the end of the 4-year cycle, so around the end of 2021 or so. But things are looking good. MACD, we've got some convergence on our two lines, so that is a positive indicator. We've got the histogram is slowly working its way up out of the red and hopefully into the green, and hopefully we'll see some strength as it continues to go up. RSI, we're at where are we at? We're at 54.44. So and rising. We're looking good there. Hopefully it continues and we get up a little higher. We're midway up, which tells me that Bitcoin is not oversold. It's not overbought. It's a good buy at this price. I mean, just looking at the indicators seem to indicate that Bitcoin would be a buy at this point. Okay, I agree. I absolutely agree. Let's take a look at let's look at Litecoin real quick, just because we can. Again, we've got 4 green candles, and these first two, they're very small, but they're green. Green is good. We're seeing some strength in the markets. Now, of course, the other thing we want to look at, and let's go back to Bitcoin because it's going to have more of it. Volume, okay. If we look at the volume, we've got 41K, 41K volume on this week's candle. Average is 43.1K, so we're below the average volume for the week. That doesn't necessarily bode well, but we'll see what happens. We would like to see greater volume. We'd like to see more volume coming into the market, buying and selling. We'd like to see more buying and selling, because if we have more buying and selling, we're going to see more healthier prices. That's really what it comes down to. And Bitcoin's really the only coin that you can really look at for volume, because if you look at things like Litecoin, its volume is all of 1 million, 1.1 million. Yeah, and its average, the average for the week is 904K. Very low volume. People are not buying. They're not buying as much on the altcoins yet. Yes, the altcoins are going up in price, so people are buying, but it's not alt season. No matter what you see on YouTube, it's not alt season. So don't panic. Okay. Same with BAT. If we look at BAT, look at this fantastic green candle for this week. It's gone up. Let's see, what do we got? We got an open at 18 cents, and at this point, we're showing a close at 22 cents. That's not bad. I mean, current price is, 22 cents. We're doing pretty well. If this continues for the next couple of days, that looks great. I don't want it to jump up too terribly high, too terribly fast, but let's see some growth. These are good. I like this. We're seeing healthy growth. One of the things I did want to talk to you real quick about is a specific stock that you've probably been hearing a lot about. If you're like me, you watch a lot of YouTube videos. I watch a lot of videos on buying and selling assets, stocks, gold, silver, crypto. I keep myself informed. And one of the stocks that I am hearing a whole lot about this week and last week is Tesla. And the reason I'm hearing about it is this massive jump up in price. And this is, again, still a weekly chart. So we're looking at, basically from August of 2019 through this week. So a little more than 6 months. Over the last 6 months or so, it has gone up. In fact, if we go back all the way to the bottom here, we're looking at May and June of 2019. So 3/4 of a year, it's been going up. And while it is not parabolic at this point, it is jumping way up. It's jumping up so much that you're starting to hear about it on the mainstream news media. I think I was talking about last week, Jim Cramer going from a bear on Tesla to a bull. Well, how does that happen? Well, apparently he talked to some people. Okay, fine. But if he's recommending Tesla as a buy, as I have always said, if you're hearing about a hot stock tip on mainstream media, and this especially goes doubly for crypto. If you're hearing about the hottest new buy on mainstream media, you've missed out. Don't buy it. You're at the top or near it. Now, I don't believe that Tesla is at the top at this point, no more than Bitcoin is. And in fact, my bubble pop indicator here says that while we're going up, we're not there yet. We'll know we're in a bubble when this red and green line get very close to each other, and when they cross, that bubble will pop. And so we keep an eye on it. We watch it and see what's going on. But we're going up in price, and we are definitely getting closer to a bubble in Tesla. And this mainstream news coverage is only going to exacerbate the problem. We're going to have a whole lot more people buying into Tesla because, oh my God, it's worth something. Here's the thing, okay? If we look back, and I'm going to go way back to like the beginning, okay? Tesla is not in a bubble yet. It has been in a bubble way back here in, looks like middle of September of 2013. You see how this goes way up and then drops? Well, it crosses right here. So it looks like the week of September 23rd of 2013. And as you can see, where it crosses is the exact peak of that price action. Okay, so my bubble indicator works great. We're not in a bubble at this point. We're just heading up. Okay, that doesn't mean that we won't get into a bubble. It means that we're not currently in one. Would I buy Tesla stock at this point? Not on your life. I would, however, buy options. Because an option, I can first of all, I can control, around a lot of 100 shares for a fraction of the price it would cost me to buy the actual shares. And I can get in and out of options very quickly, very easily. By buying it, I would personally, if I was going to buy into Tesla, I would buy a call option on I don't know, half a dozen lots. Half a dozen contracts, so we're talking 600 shares, assuming that I can afford it, which it's probably at this price, it's, I don't know, probably a few $100, maybe $1,000. Okay. And then as it goes up, or as it continues to go up, because I'm fairly certain it's going to, I make money as that price goes up, and it expires usually the week before, the next to the last week of the month. So let's see here. Let me take a look at my calendar here. Again, this is stuff so next Friday, 24th. Yeah, 24th will be expiration for January. So I've got another week. I could also, if I wanted to, I could buy a weekly option on it that would expire every week. In this case, it would still be the 24th. I can buy a standard option for next month, for February or March even. depending on how far out I think that this price is going to go. March actually might be something that I would look at if I were interested in buying options on Tesla. One, I don't have to hold it all the way until expiration, and two, the farther out that you buy, if it does continue up and you get too close to expiration, you're going to make a whole lot more money. So yeah, farther out, in this case, farther out I buy, the better it is monetarily for me. But again, not a stock I'm interested in buying at this point. I will wait for the recession, for the market to drop. Tesla, I like the fun. I like the company. I like the car. I don't own a Tesla. I would love to own a Tesla. If you want to buy me a Tesla, let me know. I would love to own a Tesla. I think that, and I'm not big on climate change. Climate change has happened since the world was formed. So I'm not an alarmist. But I also feel like, why wouldn't I do my part if I could? So yeah, I absolutely would. I would love to own a Cybertruck. As ugly as they are, I have no problem with that. I don't care. I'm not looking to pick up women. I'm looking for something I can use. And a Cybertruck is something I could use. And it's built like a tank. So I like Tesla. I like the cars, the vehicles. I like the company. But at this point, and who knows, this may be halfway up to the top. We don't know. It's very possible that we're only halfway up to the top and Tesla tops out at around $1,000 per share. Okay, fine. But when the recession comes, when the market drops, Tesla, with a parabolic rise, which I fully expect, it's going to drop significantly. 40, 50, 80%. I mean, most stocks don't drop 80%, but certainly a 50% drop is not out of reason. And, I absolutely can see that happening. So the next question, of course, is when is the recession going to happen? People have been calling for the recession for 3 years now. Well, one thing I do know for that is a fact, and of course, I keep saying it, but I want to make sure everybody understands. None of this is financial advice of any kind. I'm simply taking 30 years I spent working in the financial industry and giving you information that hopefully you can use to make an informed decision. But one thing I can tell you that is a fact is that we are near the end of the longest bull market that we have seen in history. How do I know we're near the end? Because it is the longest we've ever seen. Bull markets, if it's the longest, you got to be closer to the end than you are to the beginning. And so it's got to be near the end. Now, what does that mean? How does this affect you? When do you expect the drop to come? Well, based off of a couple of indicators, and we're going to increase this so that we can see it. So the bond yield curve, most everybody's heard of it. They may not understand what it means, so let me explain real quick. There are different. So first off, a bond. When you buy a bond, what you're doing effectively is you are lending money. Whereas when you buy stock, you're buying into the company. You're buying ownership of the company when you buy stock. When you buy a bond, you're lending that company or government money. Okay? In this case, we're looking at Treasury. So we're talking government bonds. And there are, of course, different time frames for these bonds. We've got, in this case, we're looking at the 2-year and the 10-year. Okay, so we're looking at bonds that mature in 2 years and bonds that mature in 10 years. Typically, you're going to expect the 10-year bond to offer you a higher interest rate. You're lending them money for a longer period of time, and so therefore you would expect to get more money. And you get the total amount over the entire time frame of the loan. So if, for example, a 10-year bond is offering, 5% rate, what that says is that over that 10 years, you're going to get a total of 5% of whatever you purchased. Okay? Whereas the shorter term, the 2-year, they're saying, well, we're going to offer you a 2% interest over the next 2 years. So over 2 years, you're only going to get 2%. Okay, that's normally how this works. What the bond yield curve inversion means is that now the 2-year bond is offering a higher interest rate than the 10-year bond. Okay, so now and I'm just pulling numbers out of thin air. I don't know what the current yields are. Doesn't matter for this explanation. But look, for example, now the 2-year bond is offering a 5% interest, 5% yield, whereas the 10% is offering a 2% yield. Well, which would you rather do? Would you rather get 2% over the next 10 years or 5% over the next 2 years and then turn around and buy another one? I'd rather get 5% over 2 years. So, and everybody else, anybody who's smart, would also do the same. And the thing of it is that we've noticed, as I've said many times, trading is about finding and recognizing patterns. One of the patterns we have recognized, and I got to look at my notes for this just to be sure that I got it straight, but one of the patterns that we have recognized is that when the yield curve inverts, so that the short-term bonds are offering more money, more interest than the long-term bonds, on average, 18 and a half months later, the market peaks. Okay? Stock market gets to its peak and then starts downward. On average, another half month, or 19 months total, is where the recession begins. Okay? Well, this inversion happened, looking at my notes again, back in August of 2019. Okay? So if we look at 18 and a half, 19 months from August, that is March of 2021. Okay? Now, that's one piece of evidence. The other piece of evidence is the ISM Manufacturing Index. And what this is an index of manufacturing in the U.S. How many units were built? What was the output? What was the combined output of all manufacturing in the U.S.? Dollar amounts, that sort of thing. And with this one, we have noticed that when it peaks, on average, 13 and a half months later, we get a recession. Okay? Well, this peak right here and circled in red happened in the summer of 2019. So it's not quite as specific as the yield inversion, but if we look at 31.5 months from, say, beginning or middle of summer, we're looking at spring. Well, we're looking at spring of 2021. March is the beginning of spring 2021. So we're looking at two pieces of evidence pointing to spring in general, March more specifically, as the beginning of the next recession. And as you can see, we look at this. We've got this peak back here in 2014, and then it drops down to a valley in 2016. Our current drop is below where it was in 2016. Manufacturing has dropped significantly more than it did in 2016. So this could be a significant recession. We'll see. And if you understand how money is made, if you understand that the only thing that made this boom in the stock market possible is the government putting money into the market, into bonds. They're not doing QE. Well, they're not doing QE anymore, but that's what started it. They are now doing repo investment. They're putting money into the repo fund, which is what banks use to liquidate funds for lending to other banks. Okay, so they're doing the same thing that they did with QE, but because they're doing it to a different area, they're not calling it QE, and therefore most people are not paying attention to it. But it has the same basic effect, which is it's inflating the money supply. They are printing more money, and the law of supply and demand says that if something is common and easily obtainable, it is fairly inexpensive. Well, money is common and easily obtainable, so therefore it has very little value. It's nearly worthless. And so, when that happens, we tend to see, especially when a recession hits, we tend to see what rampant inflation. The only reason we haven't seen inflation at this point so far with a $23 trillion deficit is because all of that money that's being printed is being held at Federal Reserve banks and banks that are being paid by the Federal Reserve to hold on to it. If something happens where we cannot pay our debts, where the Fed cannot continue to pay for all of the debt that it owes, just the interest really is all we're paying, is the interest on those debts. And the higher the debt goes, the more interest we pay. So at some point, we aren't going to be able to pay even the interest on that. And so they're going to stop payments altogether. Well, if the banks aren't being paid to hold that money, what are they going to do? They're going to flush it into the economy. And suddenly we're going to see hyperinflation like we've never seen before. Gold, silver, hopefully Bitcoin. I fully expect that cryptocurrencies all will rise in price. In fact, I know they will because, again, it's not that they're becoming more valuable. It's that it takes more dollars to buy the same amount because the dollar is worth less. All right, so we're looking at a recession starting in spring of 2021. We don't yet know for a fact how Bitcoin will react in a recession. We do know that what we've seen currently, the last few weeks, is that news that affects the market, the stock market, negatively tends to affect the Bitcoin market or the crypto market positively. So it tends to have a correlation more to gold than it does to stocks. That's a good thing. Again, you always want to have a way to make your money work for you. And up until now, what that's meant is that when the stock market is rising and we've got a good economy, you're buying stocks. When that turns around and the market drops, you move your money from stocks into gold. And then when the market starts coming back up and gold starts to drop again, you rinse and repeat. Well, now we have another asset that we can put our money into that actually has a much greater yield than gold has, or the stock market for that matter. So my thought is, why wouldn't you put your money into something that gives you such a massive increase in value? So yeah, that's what my outlook is. I'm not purchasing stocks at this point. I may purchase options on certain companies to help, to get a little bit out of it, because I can get quickly in and out of options, and I can make a lot of money very quickly for a little bit of money. It doesn't take a lot of money to make a lot of money in options. Options are something, they're not hard, but they're something that if you're going to do it, you need to learn a little bit about it. I would certainly recommend Investopia as a resource for learning stocks, trading, as well as options. I think that most of the big name brokerages have some education, and I think most of it is freely available to the public, to the general public. Go and read up on options and what they are and how they work. And if you're interested in trading options, it's not difficult. Trading options is no more difficult than playing craps, and I'll leave it there. You can take that for what it's worth. But that's what I've got for you this week. It's a whole lot of hope and some caution. But until next week, keep hodling.